Hello, everyone. As Jim said, my name is Chris Meislahn. I'm taxpayer rights advocate for New York State. I'm going to be going over a few tax updates we have for New York State, as well as some common concerns that we see in the department and some other programs that we have available. So obviously our mission, most important thing, is to collect taxes with integrity and fairness in the administration of the tax laws of New York State. So if you feel that you are not being treated with integrity or fairness, to please, come talk to me, what the issue is. Someone's not being treated the right way, you feel like their tax situation is different. But we try to do that as best that we can with all the tools that we have. This is probably one of my favorite slides. It's not the most important slide, but it's one of my favorite slides. It's our tax compliance continuum. Everything on the left-hand side of the slide is easier and less expensive for proposed tax legislation, publish forms, assist and educate taxpayers, right? Exactly where we are today. And on the other side, it's learn about tax obligations, review the information, file returns, and make payments. That's your obligation. So for every one of the tax department's obligation, there's a taxpayer or tax practitioner obligation, all the way down to criminal enforcement, which is obviously very expensive and costly, and we really try to avoid that. It's important to note that the advocate's office is not on here anywhere. And I'm now kind of thinking of this. The reason it's not on here is because you should be communicating with the department through our normal channels. And if you can't work with the department through normal channels, or you're having a problem or not understanding something, that's where is the best time to come to the advocate's office to get some clarity to that situation. We have some focuses that we are continuing to work on. Our One Voice initiative is one of our main ones, where we're trying to have a one voice. All of our communications, we're trying to have the same language, the same terminology, and taxpayer modernization, which we are in the middle of. We've had a update this past March for withholding tax, some of you may be aware of. And so, that is part of our modernization to try to make these programs more efficient, our data collection more efficient, so that we have tax returns that come across with less issues, and there does not need to be any kind of communication. Inflation refund checks. I'm sure many of you have heard about these inflation refund checks. This is through Office of Real Property Tax Services at the Tax Department. So these are going out in the mail. This is one of our big obligations we have. We have 8 million checks we're sending out. Okay, you got one, right? I got mine the other week too. So know that these are going out in the mail. It's continuing through November, so if you haven't gotten one, or if one of your clients hasn't gotten one, don't be surprised. They're in the mail, yes.
I have a couple of taxpayers who have not filed 2023 because they didn't have a filing account. Do they need to have paid taxes to get this, or?
They do not need to pay taxes. They need to have filed a 2023 return, which they can do, and you still are allowed to do, obviously. They can file their return as long as their income threshold is under the limits. I think it's like 150. Correct, correct. So just know that, I think that's on the next slide. Nope. That's adding it back. Nope. So yeah, if you go to our website to search inflation, the requirements are they just need to have filed a 2023 return. As we are mailing these out, the inflation refund check is not going to go out when the return is processed. It's separate from the return. So I can't tell you exactly when. I would think probably a few months later, they would most likely get their check. But to your point, if you have someone who does not have a filing requirement, they can still file their 2023 return. Yes, Phyllis?
Yeah, and I think you've got it on your website, but there's like so many scam communications about these refund checks, text Department of Revenue.
Yes.
Or is it
Yep.
Tallahassee, New York? From a phone number in Philly.
I had a bunch of clients that did.
Yep. Yes.
So if I don't receive that check, can they claim it as a credit or refund on 2024, 25 tax return?
They cannot claim it on a future return. They should be getting that check in the mail. And if they have not received it, if they don't get a check, first thing is make sure that they file their 23 return. Second thing is wait till the end of November for the whole first round of checks to go out to ensure that they got it. I don't know exactly how it's being sent out. I heard it's based on your filing, like when you filed. I don't know. So, you know, your neighbor may have gotten it or someone may have gotten it and you may not. So just wait until the end of November and then maybe say like in early December, if they still haven't received anything, you can call and inquire. Yes.
Checks from, returns that were filed in March, just received checks in the beginning of October.
Okay.
We're also just cautioning people to, you know, in terms of filing that 2023 tax return, you don't want to put somebody in a position where they might be hit with filing penalties. Again, you have some folks who don't have a filing obligation, but we just want to make sure people aren't filing a return late to get an inflation refund check that's going to be offset by any sort of penalty. So cautioning folks out.
Although honestly, if they should have done it, if they didn't, now they owe them another amount.
Yeah, so,
That is correct.
yeah, so we're just want to like caution folks.
But I mean, I have some seniors who really don't need to file, they only have social security.
Yeah.
And I always tell them, it's not worth you paying me to file your
That
return.
too, yeah.
So if they can get their check just by me filing their social security, which, you know, and their dollar of interest so that it'll go through,
Right.
then I would do that as a service to them.
Yeah.
So the check amounts are not taxable for New York State, New York City, or Yonkers residential income tax purposes. So there will be an adjustment on your New York State personal income tax returns to account for that. So for the 25 tax return, you should be seeing that on the IT 201 line 25 or 203 line 24. So you need to make a special adjustment to take that check into account to remove it from your AGI. It should be included on your FET.
So
We're not answering that question.
the IRS has to make a determination if it's going to be taxable. So, you know, gotta go to the IRS first, and then we're going to allow you to deduct it from your taxable income. But we have to go to the IRS to write up for it. And they're closed, so I don't know.
It's not technically a state tax refund, you know,
It's sales tax.
so you know, you can't say, well, I have
Right. Yeah.
So for federal tax purposes, we have the HR 1 that provides temporary deductions for individuals for tipped income, overtime pay, for seniors and auto loan interest. We just want to make sure that you know that that will be included in your federal AGI, and it would most likely be a deduction on your federal return through a form there. And as New York State conforms somewhat to the IRS, that your federal AGI will generally be your New York State AGI as well. And we will not, as of this moment, we do not have any adjustments for that unless the state legislature makes any special provisions to account for them. For personal income tax rates, starting in January 1st, 2026, there will be some rate reductions for several income tax brackets. So you may see some changes in people's withholding, that maybe they have less withholding as the tax charts will take that into account. It'll be phased in over 2 years and fully implemented by 2027. And it's extended through 2032. So these are temporary, but they're going out for clearly a number of years. So you should be seeing them for a while. And the tax table benefit recapture provisions are also amended to conform with this. Service Members Relief Act. This is an act that's been around for a while, but there was a major change back in 2023, and we've been seeing a couple issues with this. As active service members are able to claim their residence or domicile of the service member, the residence or domicile of the spouse, or the permanent duty station of the service member. So they can change that. But it's important to know that if they're going to change their residence or domicile based on the Service Members Relief Act, they need to tell us through a special condition code on the IT 201 or 203. If we don't use that special condition code, you will most likely get a letter from us saying, hey, looks like you're a New York State resident, you need to do something. And if it's, no, I'm active duty and I'm off in Hawaii, right, that'd be great. You know, you need to tell us that, but that's where the special provision code would tell us that, and it can prevent us from contacting the taxpayer or you. Yes?
Is that new? Because I thought that if you're a New York State resident, it doesn't matter if you get stationed in Washington, you pay New York State tax.
That's the old way. And in 2023, the feds amended the Service Members Relief Act to where they can change their domicile based on this information. There are some other benefits here. I know one is like interest can only be capped at 6%. So there are a few things that are outside of just tax purposes that are really important for you to be aware for service members. So if you do have any service members, to please look up the Service Members Relief Act for more information. We have information on our website about it, and there's clearly more information on the IRS has a lot of information as well. This was the big change. Was it 2023 is when it came out. So it's been around for a couple years, the change in residency, yes. Some tax credits. So we have the Empire State Child Tax Credit has been increased, as Robin mentioned at our Lunch and Learn. It's $1,000 for qualifying children on the age of 4. And as of now, it's $330 for qualifying children from 4 to 16, and that is going to change to $500 in a year or two. So you should be seeing those changes come through. Real property tax credit. This is an old property tax credit that's been around for a long time, but please note that there's a big change here. It used to be based on the household gross income. That is not the case anymore. Please note that that has been eliminated, and the credit is based on the federal AGI of the owner who pays the property taxes or rent that can claim it. So you used to be able to have 2 people own a house, a brother and sister or whatever, and they used to be able to split that credit. They can no longer do that. Only one of them is allowed to claim that credit, and whoever claims that credit has to be the one that pays the taxes on that house. It's right there, so you can maybe pick whoever would be more beneficial, right? Whoever's lower income maybe can get that benefit. But that's a big change for the real property tax credit. New York City income tax elimination credit. This is new for New York City only. This is for low-income individuals who's a New York City resident who claims at least 1 or more dependents with a federal AGI of no more than $5,000 above the applicable income threshold can get a credit to reduce their tax down to 0 for New York City. This is not for New York State, it's only for New York City, but it's a credit for them. If you want to know more information, you can look at the form IT 270 for New York City income tax elimination credit. It is not a refundable credit. Central Business District toll credit. Again, this is mostly for New York City people who are in the Central Business District, which is the congestion relief zone. So if you're down in downtown Manhattan, you can qualify for a credit. Your adjusted gross income needs to be less than $60,000 a year to qualify for this. There are certain tolls or bridges that qualify for this. Not all of them do. So if you need more information, you can search the Central Business Toll Credit for more information. Corporate tax changes. Starting January 1st, 2026, the threshold for corporations subject to tax under Article 9A have increased from $1,000 to $5,000. If you're Article 9 or 33, it still is a $1,000 threshold. This is only for 9A. And corporations must make a mandatory first installment of estimated tax or estimated MTA surcharge, if applicable, when the second preceding tax years exceed $5,000. So just know that it changes. Hopefully a lot of people can not have to file now as they've increased that threshold. There's a few sales tax changes. First one here is the TSBM 25-1S. I want to note we've talked about sales tax changes last year, and we talked about TSBM 24-2S. That one from last year has been eliminated. It's gone from our website, so please don't refer to that one. If you need to refer to one regarding amending sales tax returns, it's the TSBM 25-1S. There's some language in there that was incorrect, so we've corrected that with a new one. And as of December 1st, 2024, anyone who files or amends a sales tax return is subject to the new method. So if it's a full paid return, they file a return, they full paid it, and they're amending it down, that's fine. They're asking for a refund, that's easy to do. If they have any returns out there with open liabilities, that creates a problem, and you can't always amend that return down. You have 180 days from, I believe, when the return was due to amend that return down. After that 180 days, if that return is not paid in full, it becomes a fixed and final liability, and the taxpayer has to pay that full return in order to make any kind of changes. And this applies to all taxes and fees administered under Article 28. So that's sales and use tax, that's cannabis, and wireless surcharge is the other one. Does anyone have any questions with this? Does anyone do any business for sales tax, with sales tax for clients? A couple? Okay. Biggest thing I can say is just make sure that when they file a return, it's full paid. That's like, it'll eliminate any problems from here. There have been some changes around who can get LLC relief. So under sales tax, you have responsible persons. And if you need to know more information about who is a responsible person, DTF 17.1 gives you a great breakdown of the entity type and who is responsible and what are the characteristics that make them responsible. The only business entity on there where everyone is responsible no matter what is an LLC or certain partnerships. And so you can have a silent partner who has no obligation with the entity who can be hit as a responsible person because they are a member. We provide relief to LLC members if they have a minority share, and they can get some relief, but they need to do it per the rules of the state, and they need to file along with their protest to BCMS. There's also short-term rental unit occupancy. So for people down in New York City, it's 2%, or it's $1.50 per unit per day. Hotels already pay this. I think this is more for the VRBO or the, what's the other one? That's Airbnb. Thank you. You know, so they now need to collect this tax and remit it to the city. This is not imposed by the state, it's by the city, but just know that that's changed and that's on there. There are a bunch of other legislative changes. If you've heard of me in the past, I've talked about some other legislative changes, film production credits, things like that. We've kind of removed them because they're kind of niche things, but they are on there. So if you go to our website and search legislative, it'll come up with each year, and we have a summary by year of all the legislative changes that the tax department has on file, and you can click on it and it brings you to the link. I think it's a great tool to have to be able to go back and search for things. Some filing reminders, please. If you're in New York City, that is all 5 boroughs. They are a city resident, and they need to pay city tax. We still have an issue of people who say that they're in the Bronx or Brooklyn or Staten Island, and they go, I don't live in Manhattan. That's the city. No, you are all part of the city. So please know that they need to pay city tax, as well as if there's a residency change and you move in or out of New York City, we need to have Form IT 360.1 with your IT 201 or 203. It's important that we have that. If you're changing your residency and we do not have the IT 360.1, we are going to stop the return from processing, and we're going to ask you for it. Yes?
I had a situation where literally taxpayers moved on January 1st. So I thought, they're in the city, they were out of the city, fine, no change of residence. But I had to, kind of beat up my software to do the IT 360.1.
Okay. We're trying to get software vendors to require the IT 360.1 for that, so that is one thing that we're trying to work on. So you should be seeing that when you file those returns. Non-resident and part-year resident income allocation. So if you have someone who's marked yes for item H, where their spouse has maintained living quarters in New York State for 2025, if they don't include the IT 203B, it will be rejected. Do you guys all get rejected returns every year? No, okay. No. So know that it will be rejected. You need to make sure that you mark item H yes, and you need to include IT 203B, earned salary and wages both inside and out of New York State. So, or if you're claiming the college tuition itemized credit, that needs to happen or it'll be rejected. When it comes to rejected return, I believe we give 10 days, 10 business days, so it's like 2 weeks, to correct it and to refile that return, and we will still give you that same date of the first, when it was rejected. So if you file a return on April 14th and it gets rejected, you fix it on the 17th, we will still count it as a timely filed return because you fixed the rejection in time. Okay, so it's important to know that we will give you time. PTET filing reminders. A few things about PTET. Obviously, the election date is March 15th, and that's a hard and fast date. There is no way around that. If someone's sick, if someone's in the hospital, the department is not giving anyone any kind of leeway there. You can opt in as early as January 1st, so please have everyone opt in January 1st. Have them go on to their online services account and have them do that. I know none of you go onto your taxpayer's online services account and make that election for them. That's right. Every head should be saying, no, I don't do that, Chris. You can make a 6-month extension to file your return if you wish. That needs to be done. What else do I have on here? New corporations that elect to be treated as an S Corp. As Robin said when she asked me about it, this is one of the biggest problems we have. People come in, they have a new business, they want to make the election, but they need to, they want to be treated as S Corp. They send us the election change March 10th. That's not enough time. Okay? We have lots of people that are doing it around that time. You got to do it in February or January if you can. If you know that they're going to be making that S Corp election, please let us know as soon as you can so that we can change them over, and it gives us time to process it There is no time period. There's no legal time period that we have to do it by. So it's best if you can get it in early. The fax number is right there, 518-435-8605 for any election. If you want to amend your return, you can amend it up to 18 months after the original due date. To do that, you amend the return and you explain the reason why you're amending it, and then we will tell you whether it's accepted or not. New York State resident credit. So on the return for a group or composite return, that is line 24A. A group or composite return is not pass-through entity tax. A lot of people are getting these mixed up with lines 24A and 24B. As you can see on here, line 24A is for a group or composite return. You mark it with an X, as it indicates there, and you have to enter the EIN of that business, of that group, or the composite return. And it should also not be reported on line 8 of IT 196. So that's like double dipping. We're going to catch it. Line 24B is only for taxes paid to other states with a pass-through entity tax similar to New York State. So you would put on 24B, you put the amount of the pass-through entity tax, and you need to do a different form, 112R, for each state. So if I have a taxpayer here in New York State, and their business is in Massachusetts and Connecticut and Pennsylvania, you can do it for New York, obviously New York, and you can do it for Massachusetts and Connecticut, because those states have a similar pass-through entity tax to New York State. Pennsylvania does not, so that does not get counted on here. So if you go to our website, you search similar, it'll come up with all the other states that have a similar pass-through entity tax as New York State, and you can put them on there. Does anyone have any questions on this? Something else that we see when it comes to PTET is the PTET income calculation applies to partners and members who do not have a special allocation of profits that differs from the allocation of losses. If a specific allocation is present, an electing partnership must take these allocations into account when computing each pool. This is directly from TSBM 21-1C. So as you can see here in this example, the ownership percentage is 50-50. So we want you to put down the percentage of 50-50 on here. The share of PTET credits are different. They can be whatever you want. They don't have to be 50-50. 99% of the time they are. But sometimes you may have a partner who took a loan from the company, and so their profit share at the end of the year for PTET purposes may be different. So you can change your PTET share credit numbers. Those can be whatever you want. So know that people ask and they say, they're 50-50, but their PTET number isn't the same. How do I do it? You can do it right on there. It's allowed. Another example that we see is on here is we have 5 members that you can see. First 3 have a 25% ownership. There's no special allocation needed here. They're all going to be the same. First 3 are 150,000, and this is a real-world example that has come through that I've seen. Taxpayer D and E, their ownership and their share are swapped. Someone swapped it. So when the business filed the return, the DTF 693, I think that's it. They swapped the share number. So what's going to happen? Taxpayer D is going to sit there and think they only have $30,000, and they're going to claim a credit for $30,000, and that's going to go flying right through. Taxpayer E is going to say, oh, I have $120,000. And when we verify it, it doesn't have $120,000. So we're going to audit taxpayer E, right? We're going to go and say, hey, where does this number? Doesn't match. And again, with PTET, the entity only has 18 months from the original due date to amend the return. So if we notify the taxpayers the partners after that 18 months, it can create a problem. If it's before, the entity can correct and amend the PTET return and swap those numbers. If it's after the 18 months, the entity can't. So now what happens? Taxpayer D, who has this credit that they're not aware of and no one told them about, has to be told by taxpayer E to amend their return and claim that additional $90,000. That is how it has to happen. Yes. Well, they'll give it to you because it's a credit on your account. So for taxpayer D, they can amend their return to 120. Not according to the return. We're not talking real life, we're talking return. I just want to be, everyone make sure that you're aware. Real life I get. We're all looking at numbers on a return, and we're obligated to follow the numbers on the return. So make sure that your PTET return has the correct allocation for each partner and that they match. That's the most important thing that you can do when you file the PTET return. Right, so here it is, taxpayer E is audited, seeking clarification. Make sure the IT 653, 653, that's it. Matches the amount provided on the DTF 653. So those are the two documents that are sent out. The IT is for the individual taxpayer. The DTF is the business one filed. So if you're filing the PTET return on behalf of that partnership, please make sure that each individual has the correct number on there. These are problems that we see. People go to BCMS, they go to conferences over this. It creates some problems. And so there needs to be communication within the partnership to correct these things. Supplemental retirement plans for public employees, right? So for New York State public employees, most of them, their retirement is completely exempt from New York State tax. Please note that we have supplemental plans like deferred compensation.
So real world situation, let's say hypothetically, E would have gotten a bigger, let's say hypothetically that D has a different tax,
Yeah, you're right.
and they get a bigger deduction or refund than taxpayer E would have actually gotten. That means that New York State is really SOL because they're not really getting all the tax that they would. Well, I guess they're getting the tax
We
because
don't know, so
because he actually has to pay the tax.
Yeah.
He's paying the tax, even though he can't on his behalf.
correct, so he has to pay the tax and get it back from D when he gets a refund.
Yes.
That's right.
That is.
And they have to get along because D is, according to the tax plan, is entitled to the refund.
Right.
So if he takes his $90,000 and says, well, let's go jump on Mexico.
That's between them. That's what the entity filed. That's why we need to make sure, because on most partnership returns, you have the traditional 3 years to amend a return.
So taxpayer E has, other than through communication between partners, they have no recourse through DTF.
Correct.
Right, because DTF didn't do anything wrong based on the return that they got.
DTF didn't do anything wrong. I'm just.
Yes, but that's a real world scenario of what we're seeing with past ready tax.
All right, I just want to make sure I read it.
Yes.
I understand from the state for refund, but
I mean, all this is it's just a credit that's being put on. This is a tax that's being paid by the partnership and it's being passed through to each individual. And it has to be correct from the beginning. It's really important that's correct. Yes.
I'm guessing since this is an important part of the presentation that you're seeing a lot of this.
I've seen situations like this, but where there are errors on the partnership return regarding the allocation are errors, and the individuals think that they're getting a different number. This is an extreme one, I get. It's a large dollar number, but it could be much smaller, but it's we would say to taxpayer E, you're expecting 120, your partnership only filed 30 for you. Go talk to your partnership and go look at your return. Because of taxpayer secrecy, I can't talk to the partnership, and I can't talk to taxpayer D. So taxpayer E needs to go talk to the partnership and taxpayer D and be like, what's going on? And they need to clarify that. 100%. Correct.
The actual reports may actually show that he was entitled to the 120, but that's not what ends up being reported.
Exactly. Exactly. That's not what's reported through the PTET return through New York State. So please be mindful when it comes to supplemental retirement plans that you know that New York State employees or retired employees are subject to the $20,000 limit for their supplemental pension, provided they're at least 59.5 at the time of the distribution. Yes?
I didn't think that like a 457 or preferred comp plan was eligible for the $20,000 exclusion because it's not a pension or annuity, it's not regular and I mean, I remember back when, gotta be at least 10 years, I didn't know that, and I put through 457 distributions as excludable, and they weren't. So
Okay.
that changed?
I believe it should be within under the.
Were they 59 and a half?
Yeah, they were old enough. It was just that. So and it would say, I think it was Bank of New York Mellon, New York State deferred comp. You know, $40,000 I excluded 20 and got a letter from New York State saying it didn't qualify for the $20,000 exclusion. But that New York State deferred comp didn't qualify.
Deferred comp should. Everybody else claimed it.
And I want to say that at least 5 clients from the block office I worked for at the time had that same issue because we have a lot of New York State retirement.
So it could be a couple things. It could be that the information was not reported correctly to us by the retirement entity. Okay, like that they do report the information with us so we can verify the information. That could be one, kind of like how you get questioned all the time about W-2 or 1099-R, those things as they, it's an issue with the whoever's reporting the information to us, not the taxpayer, not the employer or the retirement entity.
I guess my question is, so like a 457 that a lot of New York State employees have, does qualify for the $20,000?
I believe so.
457 is deferred comp plan though?
Yes. Yeah, Phyllis.
Looking on your website,
And it's a
and
pension and annuity exclusion.
there's a document, common questions and answers about pension extraction adjustment, and there's a question, are distributions from a government section 457 deferred compensation plan considered New York State pension qualified for a full exclusion as an NYSSEA pension? And the answer is no. Government deferred compensation plans are characterized as pension or annuity payments. Since these plans are not funded by the employer, they wouldn't qualify for the full exclusion, but would qualify for the 20,000.
Okay, so like the slide says, it doesn't qualify for the New York State exclusion, it qualifies for the 20,000.
Yes. Correct.
As long as they're 59.
As of course.
Yeah. So if you get an issue like that, that's a great case then for the applicant to look at. Yeah.
If you need wage or withholding transcripts, you can request them for the current year. It's beginning on April 19th. If you need prior year's information, you can call 518-457-5181. You can also, if you're going back quite a while, the DTF 505 is a request for information. You can do it, yes.
Can't get them through OLS?
You cannot get them through OLS.
You mean before April 19th? Oh, okay.
And you can't get them at all from New Jersey, so you guys are lucky if you can get anything.
Oh, thanks for telling me that.
We just have to make it up. I'm sorry.
Yes.
I mean, I'll take that comment back, you know, if that takes a while to process them.
I mean, they used to
They're less
fax
expensive.
them, I mean, I get it, but it was sure be nice if you could request them digitally or
Yeah.
get them by.
Why aren't they available through OLS?
Fraud.
Yeah. School tax relief program. The homeowner benefit portal is out there. Please ask all your taxpayers to make sure they sign up for the homeowner tax portal, homeowner benefit portal. They can register for STAR that way, especially if they move within New York State or come into New York, whatever. If they're buying a house in New York and you know they're going to qualify for STAR, recommend to them they sign up for this. A couple benefits are you can sign up to have your STAR check direct deposited into your bank account. Does anyone do that? One hand. Thank you, Phyllis. Thank you for doing it. It's really.
The first year, like right when it came out, and I did get it cut that year, but then this year I got it.
Okay, yeah, so you can get your STAR credit check direct deposited into your bank account.
Then they'll never know how much it was.
You can actually use the homeowner benefit portal to find that information. So, yeah.
So I have a client who gets to see the therapist, she said, "Can you see the home?" She has this home office, and then she had to pay one where she had, I don't know, it was inheritance, and I guess it was a rental property to it. And it was a new home, she applied for the STAR, and she was rejected, and I had to send a letter, and we're still waiting for a response, because I had to prove that she lived in the house, was a primary resident. I'm not quite sure why the K1
They think it was like a rental property.
Yeah, they may think it's a rental property, and so if you've requested and you haven't heard back, if it's been a number of months, you can file a DTF 911 and say what's going on. DTF 911. You can fill out the taxpayer's information and say, I sent the information in, it's their primary residence, I'm trying to find out why it was denied, make sure that this is the right information. I will point out that for STAR, they do have 3 years to go back and request the STAR benefit. So, while it's taking time for this individual, like she will hopefully qualify and it will come through that there's no like, if you don't qualify, you're done. You have up to 3 years. Okay.
This homeowner benefit portal, is that in the client's own OLS or is that its own freestanding?
It's its own freestanding thing.
Okay, so
It's a little separate than online services.
It's within online services.
Oh, it is within online services?
For individuals.
Okay.
Tax professionals can't access it, but if you need like a client STAR now, to file their tax return, if you go to the website and search STAR, you can look up the benefits on the website.
there used to be a way you could look up whatever checks came from New York, whatever payment came.
Oh,
You
yeah.
could look up the property tax relief thing, you could look up their STAR.
Yeah.
And that's, I mean, fairly easy to use. I have that bookmark to do.
Yeah, that looks up and everything, yeah.
I have clients who bought houses and haven't applied for STAR, and then they call me and they're like, "You applied for STAR?" And I'm like, "No." But I didn't know if they needed to create an online services account. If they can just go do this portal thing,
Yeah.
then it might be more likely that they'll go do it themselves instead of expecting it.
I would also point out that if you have someone who has recently moved, to please go on to online services and change their address to their new address, because for the most part, most taxpayers only talk to New York State once a year when they file their return, notifying us of their address. So if they move, say in May, after they file their return, that any correspondence we're going to send out is going to be to the old address. So it's really important that you know to update your address for the new one so that any correspondence we send would go to the new address.
And you can do that online.
You can do that online. It's really a very simple process. STAR simplification, so effective for the 2026 STAR benefit period, income and age eligibility rules for the STAR exemption and credit programs have been simplified. So I believe going forward it'll be easier for homeowners to qualify for STAR. I believe if you are on the hand STAR, that people who don't have to file a return had to do the income verification sheet. You do that a few times. I think it's 3 times, and after the 3rd time, you'll be accepted and it'll be carried forward going forward, and they don't need to do it every single year. Yes?
Can I ask a question on enhanced card? Because I have some clients who the house is owned by the parents, but the kid is on the deed. And they get enhanced star. And then I have other clients who apply for enhanced star in the same exact situation, income levels far under between the two of them even, and got turned down for enhanced star. So I don't really understand why it's okay for some people to have their kid on the title, on the deed, sorry, and others that's an excluder.
That, that will be part of the STAR simplification starting for next year.
But so is it okay for your 60-year-old child to be, 60-year-old offspring to be on the deed for your house?
Yeah, so going forward, again, this is just for next year. It's looking at whoever is like living in that house, right? So again, you could have like 2 siblings, right? Like one lives in California, you've got a sister living in the house that used to look at both of their incomes. Like this guy's over in California, he could be like a surgeon or something, making a bunch of money. And you have somebody living in the house, the sister. Now it's just going to look at the sister living in the house and her income. So that's part of the simplification. And then 2, once you hit 65, as long as you're eligible, we're going to automatically upgrade you to enhanced star. So yeah, so that's all part of the simplification for next year. But we don't want to confuse people this year. So yeah, stay tuned for more. Yeah, those are common complaints, which is like why.
Well, and I mean, I could understand if the son actually lives with his mother.
Yeah. So it's just looking at who lives in that house going forward.
If
Not an employee who lives in the house.
Ooh, that might.
So I
Yeah,
have
that
a
gets-
client who has a live-in aide
Yeah.
who, yeah.
Get my card. Shoot me a question.
Yeah, I think we can.
For you. And then I thought of the other thing. For enhanced star going forward, only one person has to decide to get enhanced star. It could be like both spouses. So you could have, like my parents, for example, had like an 11-year age gap. You'd have to wait for, my mom to catch up age. So now, like, as soon as the one person 65, will automatically upgrade you. So yeah, good changes coming.
Important change that's coming up. It does not really affect their taxes, but the New York State Secure Choice Savings Program, it's administered by New York State Tax and Finance, but it's a mandatory savings program for small businesses. If you're a small business, you've been in business for 2 years, you have more than 10 employees, and you do not offer them a retirement savings program, they are required to opt in to the New York Secure Choice. It's free to them, no cost, and they need to tell us who the employee is, and the employee can start contributing to a Roth IRA account. So that will be probably mandated coming forward. So please be seeing that for small businesses. If you do offer a retirement program, you do not have to take part in this. If you have less than 10 employees, you don't have to take part in this. So it's, know that this is available now and people can take advantage of it. right? You have 10 or more employees. They do not offer a qualified retirement plan, and they've been in business for at least 2 years. The employers can register with Secure Choice, add employees' information, and send employees payroll contributions. As a default, when you sign up, it is a 3% contribution. When they sign up, the employee can go in and can adjust that to 0 or increase it, but the default is 3%. And there are different options they can choose, different target-based retirement funds and things like that they can adjust their account to. So please note that that's coming through and that's available now. Online service changes coming this December. Our online services is being upgraded. You will see some big benefits. Easier for forgetting username and password. The biggest thing probably for all of you is when you get a new client who comes to you and says, hey, I got a tax issue, can you help me with it? And you say, sure. And you don't see any of their information on online services when you fill out the TR2000 and you add them to your professional online service account. I will just say, going forward, you'll be able to see the last 3 years of information, okay? So when you get someone, who comes to you, that's probably the biggest thing I'm going to point out about this. It's, navigating is going to be easier, but know that you can go back and see their information for the last 3 years, even if they don't have an online service account. They go into effect in December. There's a little questionnaire. The other thing is, I don't have a slide for it, but if a taxpayer does not access their online service account, in 3 years, they're going to become inactive. Their online service account will become inactive. You as a professional will still have access to their online account. So that does not change anything. Yes, but theirs may be inactive. I've heard it's relatively easy to reactivate them. So for your clients that don't get regular notices, you may be seeing that from time. Obviously, our tax professional resources, we have a big page for it. Go there. It's always being updated. We have different information. We talk about different audit programs on there, how you can assist your clients, things like that. So it's really a great tool we have. Tax professional hotline. I hope you all have that information. Great thumbs up. Love it. Subscription services. Please log on, subscribe to all the different tax types that you want to. We do not send many emails out, so you will not be bombarded, but we will send out relevant information. If you have some clients who have sales tax requirements, please sign up for sales tax. It'll tell you the filing due dates, take into account holidays, things like that, so that you're aware. There are lots of taxes. This one basically goes up to IFTA, and then there's a state tax. But please note that there's lots of taxes. We have 46, I think we administer now. Sign up for the ones that relate to you. Protect your client's information. I know we have I believe some people outside who are selling software to protect your computers from hackers. In 2025, we've had 30 reported breaches by preparers that have affected 43,000 taxpayers. So, right, if you as a preparer, you get compromised, it's now all of your clients who are compromised as well. So it's really important that you stay protected. And if you see anything that you report it to us, DTF 275, best tool that you can have to report it to us, let us know. All it does is we can help identify who your clients are, and we can put a fraud indicator on there so we can kind of not put scrutiny on the return in a bad way. I mean put scrutiny on it like, hey, this is coming from a different place. We can kind of take some added steps to verify that it's correct. Yes?
Should we do that in addition to the fact that we probably file the federal version?
Yes. You have the federal one for the feds. This is for New York State. You should file them in conjunction with each other. We have our tax filing calendar. So every year we come out with it. If you look in January, it'll have all the due dates for all the major tax types that we have: personal income tax, corp tax, sales tax, withholding tax. It'll tell you the exact date. As I just mentioned, it'll tell you if there's a holiday, where does the return date fall. That'll be on there. So it's great for you to add to your calendar. For sales tax, some of you do sales tax. but you probably all get questions about sales tax from clients. Best tool that you have is if you go to our website, search industries, it'll bring you to a page where we have identified different sales tax industries, and we've compiled publications and guidances for those industries. So you can see on here we have A for advertising agencies, amusement parks, alcoholic beverage producers, auto repair and body shops, and automobile dealers, right? Those are all different ones. So you can go there if you have someone who's a used car salesman or a used car dealer, auto dealers, right? You can go click on it, tell you all the information you need to know about them, gives you the relevant publications and guidances related to that industry to help assist you. RFIs, it's really important that we have your correct mail address for the taxpayers, because when we request for information, we're going to send it to that last known address. So if they've moved, it's really important that you let us know that they've moved. We're going to send out a DTF 948 or 948-0 for processing. And it's important that you respond to the date printed on the letter. I can't stress that enough, that you respond to us. This is the most important slide on here is protest rights. Please, if you receive a bill in the mail, if you receive any kind of certified mail from the department, or their client does, that you take an action, you read the entire document. If you receive a notice of determination or notice of deficiency, you can protest that within 90 days. If you do not protest that, it will become a fixed and final bill. Taxpayer will owe that money, and they will have to deal with collections maybe if they can't pay it in full. But if you have any inkling that the bill is incorrect, I can't stress it enough to protest and go to Bureau of Conciliation and Mediation Service. How many people of you have gone to BCMS? A couple hands. Biggest thing now with BCMS, if you go to conciliation conference, is that you can do it over the phone. It's no longer required to be in person. So you can do it over the phone from your own office. So it can save you and the client a lot of time, stress, heartache, whatever you want to say. So please just protest. My one comment on this, or additional comment really is, I've asked someone in office counsel about this from our legal team, and they're like, I don't know why everyone just doesn't protest. If she were a tax preparer, she would have everyone protest. So I would not, lots of times I feel like maybe you can get a better understanding of exactly what's going on if you protest. Sometimes our letters aren't clear. You need a little more advice. That's a great way to do it. The other thing I want to mention on here is voluntary disclosure. Right? New York State does not offer amnesty. We have in the past, many years ago, have amnesty programs. We do not have anymore. Since 2008 or 9, we have voluntary disclosure. So you can come in at any time and voluntarily disclose any tax debts to New York State. Eligible taxpayers who participate in the program and comply with its requirements will receive protection from possible criminal prosecution. This is in the tax law. I want to point that out, that the requirements are in the tax law. You cannot be under audit. You cannot have a bill for that tax period from the state. You cannot be under criminal investigation from the state. And you cannot be a part of certain tax shelters. Okay, there's specific tax shelters that do not qualify. What do you get for this? No penalties. Limited look back if you request it. What's limited look back? You only have to file the last 3 years of returns if you ask for it, and if we grant it, which most of the time we do. So instead of filing 5 or 6 or 7 years of returns for an individual, you can file just 3. That seems like a great deal, Chris. What's on the flip side? They just need to be compliant going forward. Okay? So if you have someone who comes to you, they're not really sure. Yes, Jim? Oh, 5 minutes. Okay, yeah. So please note the voluntary disclosure program is great. Even if it's tax fraud, You qualify for the program, okay? That is in the tax law. If you cannot pay the bill in full, you are obligated to get a installment payment agreement to pay it over time. That is in the tax law. So the department has to adhere to that. So please, if you have anyone who thinks that they may qualify for this, if you have a client who has a corporation that's been, defunct for 15 years and hasn't filed a corporate return in 15 years because it's just kind of been sitting there, you can file for voluntary disclosure for them, file the last 3 years of returns, pay the $25 each year with a little bit of interest. You get a clean bill of health, okay? Please note that voluntary disclosure is there. It's a great tool. Take advantage of it. Know that it's there. If you need any help, if you're having any communication problems with the department, please fill out DTF 911. That's the form to come to my office. We will help assist you, get you to understand exactly what's going on so that you can resolve the problem with the department. That's my name. That's my email. That is my phone number. So call me. If you have any problems, any questions, email me. Best thing you can do is file DTF 911 though with a specific problem. It'll take about a week for us to get it assigned to an advocate who will communicate with you if they need to. Or if you send everything in, we'll communicate with the other unit. That is all that I have. So thank you, everyone.